Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 304 for June 28th, 2021. We are recording this at 1 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com, and you should be seeing my screen and my charts right now. And today we're going to start out talking about the S&P 500 and whatever else interesting we see going on today.
Let me go get a headset. Hold on.
Okay. So today I've arranged for John Nyaradi of Trading Gods to join us, as well as ProTrader Mike of Mojo Day Trading. And Jim, the option professor, is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, great. And good to have you guys with us. We're starting out with a little bit of a back and forth action in the markets today, trying to find its footing one way or the other. And it'll be interesting to hear how you guys see things are developing and what you guys see are coming up. As far as before we get started, let's get a quick intro in. John, Trading Gods, can you give us a little background on yourself, a little background on what Trading Gods is up to?
Sure, thanks, option professor. I'll call you doctor, huh? Or
yeah,
professor.
Yeah.
I'll call you
the
professor. No, that's great. Yeah. Well, thanks very much. Yeah, a little background on me. I've been a professional trader, I think, for about 14 years, and TradingGods.net is about mostly options trading right now. We're doing two type of portfolios. One is option selling, and the other is option buying. So we have two different variations going on.
Sure.
The objective there being to diversify strategies as well as assets. You know, it makes sense to have a multiple approach, and especially in today's markets.
Yeah. Yeah.
I'm the author of a book called Super Sectors that's published by John Wiley and Sons.
Mm-hmm.
And I've been published all over the internet, Yahoo Finance, Market Watch, had a column there for quite some time, the USA Today. So seeking out for all the outlets for publication. So it's been great. And options, of course, I think offer investors a lot of options.
Yeah,
trying to be
a lot of ways. Yeah, a lot of ways to go. A lot of ways to skin the cat there. Yeah.
Yeah, and I think it's just a great opportunity, especially for small investors. You know, and you can do so many cool things. And so, we're just focusing on those two strategies that I mentioned: buying options, but in a different way than most people do it, and then selling options as well.
Sure. And later in the broadcast, we'll go into a little bit more detail on some of the strategies that you tend to favor. And of course, at the end, we'll go into how people can get a hold of you to get more details.
Great. Thanks, Prof.
All right. Sounds good, my man. And Trader Mike from Mojo Trader. Obviously, you've been on the broadcast before. You're following some pretty volatile things that are very exciting from time to time. So a little background on yourself for the uninitiated and a little background on what's going on at Mojo Trader.
Thanks for having me again on the show, Dave. Love it. And yeah, everything's volatile in the stock market unless you're in some dividend stock that really doesn't move and is not on the radar. But everything pretty much on the radar these days is volatile. And I don't like to call which direction it's going. I just like to play whatever the trend is. That's my friend. Mm-hmm. And usually stocks in motion stay in motion. Mm-hmm. Crypto too, mm-hmm. and bonds too. Right. And the tide in my backyard too.
Yeah.
It's rising. It just really continues to rise a little higher. You know, a couple of weeks ago, I was playing golf and I would go by this one hole. I live in Florida, and it was so ugly. There was no water in the whole canal. It was so dried out for so long. I'm like, when is it? It eventually has to fill up, you know, like the market. It just goes up every single day. Eventually, it's got to do some sort of correction. And I went and played. We've had a rainy week and a half. I went there. It looks beautiful. It's all filled up to the top with water. And I played there a couple of days. I said, this may be the signal that the market's going to correct, because it's about time. It doesn't look too pretty with the market every single day going up to a new high. The Dow Jones, 34,194, is up 216. I mean, is down 216, and the NASDAQ is up 100 points. I thought they used to go in favor. When the Dow was down, the NASDAQ was down. Isn't that correct in the trading gods? What do you have to do with that? How does the trading gods fix that? That when the Dow's down, the NASDAQ's supposed to be down. And when the Dow's up, the NASDAQ's up. Now it doesn't do that anymore. How come?
Yeah, well, that's the question of the day, isn't it? And it all revolves around the Fed and where we are.
Hey, Jim, are you there? I think we lost Jim.
We lost Jim? Okay. Well,
Okay.
you've got a beautiful chart of the S&P 500. It looks like, you know, if that was a ski mountain and I was a beginner, I wouldn't want to go up that high. Go up to the top, man. It could be a treacherous way down. You know, you just probably want to study for a while and maybe practice on a simulator instead of jumping in the market at this particular time, because it is very volatile. And I think there's a small bubble above where it is right now. It has made a little cup and handle. There's a little bubble above it, which is the reward. But I think there's a bigger bubble below it towards that 4,000 mark. That's a bigger risk. So in what I'm looking at is a bigger risk than a bigger reward with the chart that you have up.
So where do you think it's headed by the end of the week? So probably down.
42.77, you see that red bar? That's called, if I was able to draw, I would draw one connector to the green, little top to the red, and then come to the other side, and that could be another red, and that's called a Cupid top. It makes like a heart. It makes like a heart. It comes over. And that's bearish. If it gets a red bar down like it did before these four up, we may cross some moving averages and some things on the technical side that a lot of people look at that they don't believe it's happening, but it does. I've seen in the last 30 years, stocks go down a lot faster than they go up. And if the trend is your friend and stocks in motion stay in motion, we could be in for a serious downturn. So that's what I'm looking at. And I'm short right now, UVX, I'm long UVXY currently, as right now I have it at 27.69. It's going through 28. I'm long VIXY at 23.96 to go through 24. It's 24.13. So I do think it has started. You're looking at these down here. There's very little risk in a stock like this. You'd risk what, 20 cents or 30 cents. But if you catch the bottom right there, the upside could be $2, $3, $4, 20, 30% from here easily.
Okay. And
David?
Yeah. Hey, Jim, are you back?
Yeah, I'm back. I just got kicked off for a couple of seconds there. So basically, Mike, did you give a definite answer on where you think we started out at 42.85 on the S&P on the opening? So from 42.85 S&P till Friday, are we talking up or down in your mind?
We're going down to test.
All right. Let me just get John's ID on that, and then I'm going to come back for your reasoning. Okay. So John, Mike is to the downside. What are you thinking, John?
I would be more to the upside for the rest of this week at the top of the Bollinger Band, but still, you know, I'm looking at you look at big tech; they're all moving up. Tesla and you know.
And maybe, what are you thinking? End of quarter and pre-holiday, you could get some paint to tape type stuff.
Yeah, I think so. You know, you have a Tesla debit, you know, vertical debit spread that's doing real well. And Netflix, same thing, doing real well. Teladoc, the techs look really strong. And the S&P, I don't. It's looking positive, but you know, like Mike said, they're diverging here, which is always a negative sign. You know?
Yeah, no. It could be a situation where after the holiday, maybe it'll change. But the thing behind the curtain here, Mike, you were giving some of the ideas that there could be a rollover from this level. You got guys like Tom Lee of Fundstrat. They're still looking for 4,400 by the end of the week, possibly, because they were saying by the end of the month. And so there is a risk, I guess, of some type of a pre-holiday acceleration. But you're more concerned that if this thing starts rolling over, there's some downside ahead.
It already is rolling over. I see a red bar forming at the top of your bar. The current bar is a red one, and the one before that is a green one. If the next one is any bit lower and it forms where that red one is the tallest, it's a heart, a cupid top. The stochastics, the slow STO, is going below 80% at that time. And if the stochastics, which have been above 80% for quite some time, switching to a longer time frame chart in this bullish trend we've been in, will reverse, going back to the shorter time frame chart under 80% on the stochastics, and will go lower and lower and lower, probably down towards 20%, and pull us towards 4,100 and 4,000 on the S&P. Will it happen by Friday? I don't know, but that's why I'm on the show telling you it could.
Yeah. So you're actually taking the direct opposite position of the guy, Tom Lee from Fundstrat. You think this thing is not going anywhere near 4,400, and the likelihood of it rolling over towards 4,100 is pretty good?
That's correct. I think the SPY right now is going to go back under 420 and head back towards 400.
Gotcha. All right. And your reasoning's outsider, or you're just technical all the way?
No, I'm according to price. When a stock goes through par, an even number, 100, 200, 300, 400, it usually goes about this 25, 30 cents on the SPY. If you look back when it went through 300 and when it went through 200 and when it went through 100, the escalation through those hundreds has been a little bit more. This is the biggest one right here. The one through 300 ended before it went lower at about 318, 319. The one through 200 went a little bit less. This one's up 30 points over 400. So according to my price system, which I do everything by price, this is way overextended. And it may go another point or two. It may head towards 430. It went to 427. But I think we see a red day, down 2.5, down 3, and down 5, which would be about 10, 15 points from here, putting it back down towards 410.
Gotcha. I gotcha. John, a little bit of what's in your secret sauce on saying that the market may be rising a bit?
Yeah, I think what I'm seeing and thinking is that, we had the little temper tantrum last week with the, rise in inflation, and then Jerome Powell's statements, and they walked all that back, which moves things higher,
Mm-hmm.
And
then you had that quadruple witching, which also was disruptive, right?
Right. But I think everybody's now settled down, and we're doing the hopium again. So I would see through the summer a steady kind of progression. As Mike was saying, certainly maybe a little down in here, but overall higher through the summer. But I think if you look out ahead, it becomes very murky, around the autumn time, because you read a lot of smart people. Michael Burry, the Big Short guy, you read some of his.
He's my silent mentor.
That guy, I've got some questions.
Google and Amazon, when he went short in the mortgage boom, I made a very good play back when he was short. And he's short Tesla and a lot of big names right now. He thinks this is the biggest bubble beyond any bubble that's ever been a bubble. Am I right?
Yeah.
He said that.
I've got some quotes here from him. He's Seach Cassandra on Twitter, and this guy's a smart guy. He's a neurologist, So he says the mother of all crashes is coming.
Mm-hmm.
All hype speculation is drawing in the retail before the mother of all
Dude,
crashes.
he's one of those aliens.
Yeah.
He's
Crypto
like
falls for trillions, or meme stocks fall for tens of billions. Main Street losses will approach the sizes of countries.
Yeah.
Mhm.
He says
He's in
FOMO
it. He's one
parabolas
of those.
don't resolve sideways. You know, people always ask me what's going on in the market. It's simple. It's the greatest speculative bubble of all time and all things by 2 orders of magnitude.
Yeah.
And that's some strong words, you know.
But then look at that SPY going lower and lower. We may end the show. It'd be, the longer we stay on, the more it goes lower. I'm short right now, so I like it.
The other guy I follow, you ever watch, his name is Charles Nenner. He's a psycho theorist. He does a lot of hedge fund advising and stuff. He was calling the other day, I read his call is for a 50% decline in the Dow. It didn't put a time on it, certainly not at the end of the week. I think you start looking out in September and October, and if the Fed starts their usual thing, around Jackson Hole in August, the big confab.
Yeah.
This could be a change of the weather for sure, because, and then Ray Dalio, he's Bridgewater, biggest hedge fund in the world. He said there's no way they can raise interest rates without a disruptive, consequence for the market. So
They just raised mortgage rates 3%. That's starting.
All right, with this scenario that the stocks might get in trouble and maybe the inflation sticks around and the Fed has their hands tied because they can't really hike, maybe the most they could do is taper a little bit. Do you guys have any feelings on these metals or crypto that they could go nuts on the upside in the latter part of this year? What do you think, Mike?
I'm glad you mentioned crypto, because the metals I don't like and talk about, but the crypto, listen, 2 months ago, Bitcoin was 60,000. Every coin following it was 3,000, 2,000, 1,500% greater than it is now. And everyone was going, when Elon Musk was on Saturday Night Live, it was 78 cents, Doge. Doge was 16 cents last week. So nothing's changed with the coins since Saturday Night Live, just the market and the conditions. And everything was fear of missing out. So everyone went in and bought, just like when Bitcoin went. When I was in it originally, I bought it at 980. When I made the move from 11,000 to 14,000 was huge. 14 to 19 was like a wick. It flashed up and came down. So a lot of people probably were short and got closed out. And at 19,000 was the same as it was in the environment at 60,000. And I experienced Bitcoin go from 19 to 3. Everyone hated it. It was the worst thing in the world. No one's making money on it. The miners are crazy. They got to make money at 9,000. Meanwhile, it went 6,000, 9,000, 20,000, 40, and it went to 60. So this is in the reality of maybe it goes to 500,000 a coin. This little blip here is nothing. And all of the coins that are making up the indiscrepancies and the things that Bitcoin can't do, like Ethereum and EOS and these quality cryptos that are utility coins, the DeFi coins,
right,
that actually do something, will continue, in my opinion, to be the future, not the stocks.
And with regards to this pullback we've just seen, is it over?
Yes. I mentioned on my show, I do a Mojo Day Trading show on YouTube, pretty much every day. I mentioned when we first fell from 60, the first storm, everyone thought it was over, but we were in the eye of the storm. And the backside is much worse than the front side in a hurricane and in a storm. And Bitcoin was going to go lower from 35 when it rebounded back to 40, and it went under 30 to 29. And that's the buying bottom opportunity that creates a box between 29 and 39,000. It could stay in there for a really long time as it stabilizes, builds its adoption, and then Ethereum, Dash, Matic, Polygon, and Pancake and Uniswap, they continue to grow and adopt and be the future. I really think if you're a great company now, why would you want to go public in the stock market where you have investment bankers and every single hand in the middle of it? with unlimited supply of shares that you can just keep on doing, or a limited supply of coin that you can control and is not involved with investment bankers and centralization where every single person's trying to get their hand in any kind of growth or profit in your company. I would want to go as an initial coin offering rather than an initial public offering if I had a really unbelievable growth company going public right now, because the market right there is in infancy, where the stock market, they're talking about changing it.
Right. Hey, John, as far as you're concerned, do you look at the gold, silver, platinum, anything like that? Or are you strictly crypto to try to hedge on inflation?
Yeah, I think I would agree completely with ProTrader there. The Bitcoin, these are early days, and the Bitcoin move still at 30,
Yeah.
40, 50,000. These are still very early days, because he hit on the key element there. It's a limited supply. And of course, we all know that supply and demand. Every time you have a finite supply,
Mm-hmm.
prices are going to be compressing and upwards and over time. It's been a wild ride. Will continue to be a wild ride. I think the two factors for Bitcoin, the limited supply, and now you're getting this institutional involvement, which was never there before. You've seen them try to fight it. And now all of a sudden it's where everybody, Fidelity and Wells Fargo and everybody's getting into Bitcoin, having some kind of a participation. I have a very close friend, several close friends who are, traditional mainline RIAs, retirement investment advisors. And even those guys are starting to say for their biggest clients, they should have a small Bitcoin exposure, so it's going mainstream. There's just no doubt.
Yeah.
And it's not just Bitcoin. Bitcoin's like the $100 bill. There's a $50 bill, a $20 bill, and a $10 bill with Ethereum, Dash, and some really other great quality coins that the RIAs and the institutions are looking at.
Yeah, it's fascinating. You think about it. I'm an old guy. It's always gold and silver, right? And I think now Bitcoin is obviously the new gold and silver. It's the millennial.
Yeah, you want me to hear how I explain Bitcoin and everything to everybody in the layman's terms? I say you have a bank account, right? When you transfer money from your savings to your checking, you log in, you put the amount, you hit send. The bank's computers, which are centralized, they bought the computer, they're running the electricity, they're moving your money between your two accounts instantly, and it's all digital, it's all computerized. That's what Bitcoin mining is. When someone sends Bitcoin from one person to the other, there's an anonymous computer, and it takes 60 of these anonymous computers around the world to verify the transaction to make sure it's really secure and validated, where the bank just has one transaction. So the miners are connecting their computers and their electricity to try to mine and verify the transaction between two people. And if they do, they get a little tiny piece of that Bitcoin transaction in their wallet. And that's what the miner does. He secures the network and builds it. And the more miners there are, the more secure the network is. And with Bitcoin, they're going to have to change the electricity scenario. It's still in its infancy, to mine the Bitcoins without using so much electricity. And think about it, when there's the last Bitcoin, the electricity to mine the last Bitcoin will take $1 million in just electricity, and it's going to take a long time to mine the very last coin. So no one's going to mine the last Bitcoin unless it's profitable for the miners. So Bitcoin should be around $1 million a coin when the last coin is there, in my opinion, due to the limited supply and the price of it as it goes, and it keeps on halving from 1 million to 500,000 coins to 100,000 coins to the last 10,000 coins. There's only going to be the biggest miners in the world at that time mining the last thousands of coins, because it's going to take so much electricity and computer power to mine those last coins. And that's fat, Jack.
It's fascinating times, you know, like Microvision the other day bought a bunch of Bitcoin, their stock went down, Bitcoin went down, now they're coming back up. It's part of a bigger picture here, you guys. This is a revolution of the little guy. You know, you look at the Wall Street bets and the Reddits and those guys and the Bitcoin. You know, it's really a changing climate. You know, the hedge funds and the big banks, they've run all these things, and now all of a sudden, guys stepping up.
Yeah, the Winklevoss twins put it great. They said you can actually back when the internet started, you couldn't buy the internet. You could buy AOL, you can buy Silicon Valley companies that would benefit from the internet, but you couldn't buy the protocol. You can do that with Bitcoin and Ethereum and the blockchain. You're actually owning a piece of the protocol. So all in the future, the horses you're owning a piece of the track. The horses just have to run in the future and you're going to make it. Whereas the internet, you didn't have that opportunity. And if you did own a piece of the internet, look at it now. That's the analogy that the Winklevoss twins gave. And dude, those guys are from the future, man. They know.
Oh no, it's accurate. I totally agree. It's and I think just that this whole movement, you know, where again the kind of power of the people, it's really a fascinating time, you know, and it's that I don't see that going away. I think anybody who discounts that is in trouble, you know.
Yeah, you know, I don't know you guys from Adam. Even though I know you, Jim, and I know Dave. But listen, in the future, we're going to have an agreement together that if I'm on your show and the people like it and they want to pay and tip, they're not going to do it through their credit card. We're going to have an agreement in Ethereum that we're going to be on the show. We're going to supply the content, and the people that like it are going to put little tips in Ethereum. And we're going to get that directly into our wallet. It's not going to go through PayPal where they're going to take some. It's not going to go through their credit card where it's going to cost them anything. And that agreement between two people or anything to make something happen is the future, because everything between anything is an agreement. And that's what Ethereum is. And everything, I think, will be run on a version of Ethereum, in my opinion. So Ethereum is very valuable. Bitcoin doesn't do that. It's just a currency. You can go buy something with it. It doesn't do anything.
What about Coinbase and MicroStrategy?
Mm-hmm.
MicroStrategy seems to be borrowing money and buying Bitcoin, and whenever they make money, they're putting it in Bitcoin. So it's a way to get leverage on Bitcoin. And then Coinbase obviously is what they're doing. Those two companies make any sense, or are they going to be dated, or what do you think?
I think the guy who runs that company had a head start 2 years ago when he bought his first Bitcoin at 10,000, then he added at 19 and made it like a big announcement. And then all the institutions and the big boys said, you know what, this is $1 billion company, MicroStrategy, and this CEO probably knows something we don't. So I ain't gonna let him get ahead of us. So let's go look into Bitcoin. And that's what a lot of companies are doing now, and a lot of hedge funds. And if you don't buy the dip, you're going to be buying the rip, because when it's running up again and your neighbor has it and the hedge fund guy's winning on it and the prospects are rosy, you're going to be buying it high.
You gotta buy the 40 and 60% drops. Those Fibonacci drops have been pretty good times to buy. Let's turn. I want to turn it real quick over to a couple of things that I'm finding on outside looking in today. That's very interesting. One is in the banking sector, and the other is in energy. OPEC has a meeting on July 1st. They're supposed to be doing something maybe with the supplies, and it seems to me that these energy shares are having a heck of a time going higher right now. And the same thing, the banks got the green light last week. They're supposed to get another green light at 1:30 today Eastern time, and 4:30 Eastern time. The banks don't seem to be going very much right now, and neither do the energy shares. Do you guys see a couple of red flags there?
Look at the bank. Look at Bank of America right here. It went from, wow. Pull up that on your chart, man. Let me go back to your screen. That's crazy.
I mean, they're supposed to release 140 billion
Look at-
plus in
Look
return
at
of
Bank of
capital.
America. Scroll, zoom in on that thing right down there. There's big red right there. So there's your Cupid top. Let's go back, the big red. Let's go back 2 more red bars to the top right there. It went green, green, red. Right, no, 1 more. Right there. Move your mouse a little bit. 1 more red bar over. Right there. Where, yeah, right there. That's the S&P right now, that red bar. That's the Cupid top. You see how it crossed STO and it was green the next day, and it still went under stochastics. The next day it was red, 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 and then big red came. Then after big red came, big red closed Marabuzu, meaning the red bar or the green bar on a big day has no wick. That means it closed right at the close, at the low. Look what happened the next day. It dropped down all the way to 39. At that particular time, Dave, what date was that at the 39? That date was like the 14th or something like that. The plunge protection team came in. You heard of it? You heard of the plunge protection team? Okay. They were formed when the last crash happened to firm up the markets. A lot of people say it's a rigged system. If they didn't come in there and the next day, instead of the green bar higher, it was a red bar lower, the newspapers in Wall Street would have been in such a boil that the crash is here and everybody's going to go freak out and sell. Instead, they firmed it up and they brought it right back up. And that's rigged.
Well, yeah, and how much longer can they do that? That's the question. They've been doing this for years, as you know.
Jim, how many times have you been in a stock where it adjusts down like that and then it goes back up to where you're even 3 days later? I've never been in one ever, dude, ever. And I've been trading for 30 years. When I'm in a stock or and it goes down, it continues to make me lose. But with this situation, they're rigging it or something. Who's putting all this money in at this particular level? Is it the shorts coming in every day and saying, oh, I'm wrong again, I better buy back? Oh, next day, oh, futures are up. I'm wrong again, I better buy back. I mean, this is happening. Count back 200 days in a row, more. That could be driving the markets higher. So I don't think fresh money is coming in and buying anything. They're just sitting there.
Well, with the VIX down under 20, it is attracting some of the sideline cash that was concerned about the volatility being above 20 on the VIX because, you know, they didn't want to be involved in something that's extremely bouncy. And so maybe with the VIX under 20, there's some people who think that that is attracting the sideline cash because a more stable market makes people more confident to put in more money.
Yeah, that's a bottom right there. You go back before the last run when it went from 10 to 85, it's in the same base. It's strong as can be down there at 1630. Scroll back to June of 2017. There it is. It ain't going in. It ain't going lower. There it all is. Every time it hits in there, look at the spikes higher. When is the next spike? I don't know. Could be in the next 5 minutes. Could be in the next 5 weeks. Who knows? But it's going to happen because history repeats itself.
Do you guys, with regards to, let's go over some different stocks that you guys are kind of focused on or strategies you're focused on.
Yeah,
so at
let's
least
do that.
people get a taste of what you're actually doing.
Yeah, because I don't look at any of these big stocks.
Yeah, right. So get some of the ones that you're kind of following here, Trader Mike, and then also maybe some strategies, John, that you're kind of favoring a little bit, and or give some examples of strategies that you favor. And let's start out with Mike and see what he's got.
Okay. Am I able to share a screen or no?
I'm not sure. David, can he share a screen, or do you want him to just give you the symbol and you put it up?
Yeah, just give me the symbol and I'll.
Okay. Let me open up my newsletter from last night, fresh. my fresh picks from my research. This is the CANSLIM system.
I was going to say, yeah,
I go through the
market.
MarketSmith database. I
Right.
go through the MarketSmith database. I'm going to show you a good one. So let's go. Okay. This is a good one. Is this SCKT? SCKT. And it's not really trading a lot. UTI. All right, here, let me open up my Twitter. It's right here on my homepage. Okay, I picked AHT at 283. Ashford Hospitality at 283. It went to 750. It's bounced back down and it's kind of like hanging at $5. This is a nice one of mine. Hold on a second. Let's go to the 620 newsletter. And the first one is ATHX at $1.50 right here. They are going to do a 41-cent loss in 2021 to a 9-cent loss in 2022, a 300% increase in their current earnings. Last quarter, they did a 338% increase in their sales. So the C and the A part of this formula is real nice. I'm expecting a move over this $1.80 right here. And once it goes over $1.80, I'm going to add into $2. And then it's going to look to break the top of that $2. That's my mark. The top all the way up there is 303. I think it eventually goes to the top of 303. You see the big volume bar traded right there, 16 million. That was a 733% increase in their volume on that day to 17.2 million shares versus the average of 1.7 million. I love this little stock. And they do have a larger float, 200 million, but it still can go. Another one I'm looking at, smaller float, is RSSS, Research Solutions, $2.50 I bought it at. It already gone up to 290. Nothing's changed with the company. They got 7.5 million in sales to 8.3 million in sales. They're growing from a loss of 5 to a loss of 2. So they're growing over 100%. 26.4 million in the float, going over 277 and 279. Once over that, that'll be the base, and then it's going to go over 3 and stay there. They provide customers with access to millions of newly published articles per year. It's a commercial services market research company. And I think I got one more for you if you want. This one, Cyanotech, CYAN, at $2.94 to go in a base breakout, to go break above 3. The last time it spiked was to 629. They have 6.1 million shares in the float. Last quarter, they did 13 cents versus 3, a 333% increase. And they're going from a loss of 62 cents per year to a gain of 6 cents per year, a growth of 1,000%. And they manufacture dietary supplements. They manufacture dietary supplements and antioxidants derived from microalgae for the health market. And last couple of days, they've had a 749% increase in volume to 500,000 shares versus 56,000 shares. Cyanotech.
And you've been using the CANSLIM approach on all these?
Every one of them, correct.
And just real quick on the CANSLIM, explain CAN,
Yeah, basically William J. O'Neill, editor of the Investor's Business Daily, author of the #1 book on Wall Street called How to Make Money in Stocks, 30 to 40 years ago, researched every winning company in the history of time that ever went from 10 to over 100, and he found they had 7 similar characteristics. Excuse me. All of the companies had it. CANSLIM is the acronym, excuse me. It's an acronym, CANSLIM, CANSLIM. C is current earnings per share. O'Neill saw all the greatest companies had more than 30 to 50% in their current earnings per share greater than a 3-year period of time. I like it 100 to 3% for a year period of time. He saw the annual sales with 30 to 50% for 3 to 5 years in the company before it made its big move. I like 100% and greater for a couple of quarters is good for me. The N, all of the companies had something new. They were hitting a new high. They had a new CEO. They had a new product. Something new was making it move. The S is shares outstanding. Every company had less than 30 million in the float before it made its big move. The bigger the company with the shares, the harder it is to move the company. The L is a leader in the industry. He ranked every stock from A, B, C, and D, with an A being a leader in its industry. So even if you have the best performing, you love this stock, if it's not the best performing stock within its industry, it's not going to do the best. So you want the leader. You want the I, the institutional sponsorship. Every stock had banks, mutual funds, and institutions that own them as a percentage. You have to have that. And the average was around 20 to 25%. And M is market momentum. He ranks 197 industry groups from 1 to 197 according to the stocks that are within the group moving up in rank from week to week. And the top 25 ranked stocks are the ones all the banks, the mutual fund managers, and institutions look at. So if you're not looking in the top 25 industry groups, doesn't matter if you've got the best stocks in sliced bread, it ain't doing anything. And that's the CANSLIM system. I've been using it for 30 years, and I have built my own proprietary knowledge base on thousands of small cap stocks that fit this criteria exactly as I described.
Sure. All right, John, back over to you. A little bit of background on some of the strategies. Maybe you could do some generic explanations and people get an idea from not only the sell strategies, but also some of the techniques on the buy strategies that you like.
Sure. Thanks, Prof. So, looking at the big picture, what Mike just described, the CANSLIM makes a lot of sense. I think let's just step back a minute, because I always try to take a macro view of things and then drill down from there. So this is the everything bubble. I think we all have discussed that, described that. You just look down a list of things, the Buffett indicator is at all-time high, the Cape Shiller is at a higher level than any time except the big crash in 2008. You got this frothy Wall Street bet stuff going on, and now you have this new thing entering in here, inflation concerns, potential of high interest rates. So are we headed for the big one? I would suggest that we are, and probably in about September, October, the time that if you look back in market history, Black Monday, Black Tuesday, 9/11, all those things are in that time frame. You compare this to the Roaring '20s, there's some interesting comparisons. Back then, the 20th celebration of technology, it was autos, radio, refrigerators, Walt Disney, say it's the internet.
Jesse Livermore, my man. And the story, I read the, operator, the reminiscence of a greatest stock operator. And I saw a show on the History Channel a couple of weeks ago, Jim, where DuPont was building the DuPont building and the other guy was building the other building. And They were back. They didn't care how much money they were spending. The markets were flying. Everyone was buying. They were new houses. And all of a sudden, boom, the crash came. And they showed pictures of people that were like lying in the streets and just crazy things, man. It happened very, very fast back in the 20s. I watched a show on it just a couple of weeks ago.
Yeah, it'll happen fast again this time, and there's so many parallels. It never changes, you know. It's not different this time, and it's boundless hope and optimism, heavy consumer borrowing, faith in the Fed, of course. And then that famous quote, like you just described, October of 1929, just before Black Thursday. The American economist Irving Fisher said, "Stock prices may have reached a permanently high plateau." You know, we got people saying that today, it'll never go down. You know, but if you look at some of these smart guys, that is not going to happen. It's not different this time. So, Prof, my view is for right now, I'm bullish. I do two things. I do vertical debit spreads where we look for issues that are going to make a quick breakout. Because as you know, when you buy an option, time is working against you. You know, time is your enemy. So we use the vertical debit strategy to limit your risk. Right now, we're in several of those today. Cadence Design Systems, HoloLogic, Terraframe Therapeutic, Netflix, we're actually on Netflix, Teladoc, Trex, and even Tesla. And they're doing fine. We've been in those since the beginning of the month. And
are you going out about a month because it's a short-term strategy, or are you
yeah, it's always short-term. Yeah, exactly. We usually will buy, you know, and we do it differently than the way, you know, most people will buy an out-of-the-money option, as you know, and that's just buying a lottery ticket, you know.
Right.
And so we buy in-the-money options, and then farther out one, you know, you sell, so you get that risk hedge in there.
Gotcha.
And so those are all doing great. I mean, we've been in them since about you know, sometime earlier this month, and that'll continue for a little while. And then the other thing we do is we sell premium because you know, as you know, most options expire worthless.
Selling premiums, beautiful, Jim. Great job, dude.
Yeah, 75 to 80% of all options expire worthless. So you got to be careful because it is a little bit of you know, picking up nickels in front of a steamroller. You got to be on the right side of that tree.
Jim, right. Jim, I got this triple threat strategy, Jim. It's called my triple threat because you're selling a put, so you like the stock if you're not doing it on an index. So what I do is I sell the put, then I buy the shares, then I sell the covered call. So if I'm right, the put expires, the stock gets called away, and I win on the collecting of the premium on the covered call. It's called my triple threat. What do you think of that?
Yeah, that's a good idea. I like it.
Cool.
Yeah. It's a directional bet. So, you know, it's a directional bet. So it obviously works very well if the direction's correct. That's for sure.
Yeah, man.
So when you're selling, you know, you're doing the opposite. The trend is your friend, but you're selling away from the trend. You want to go where the market's not going to go, you know, and we do that very short term. We enter usually Monday or Tuesday, no later than Wednesday. We're out by Friday. These are 3.
Yeah, you know who's good at that? Karen. You know Karen?
No.
Super trader Karen. You never heard of her?
No, I don't know her.
She turned $500,000 into $40 million in 3.5 years selling premium, bro. Google her.
I will. Yeah, I haven't heard her. I'll check her out for sure.
Google her. Super Trader Karen, her name is. She's very famous. Very, very famous.
It's good, consistent income. And the cool thing is, you know exactly what your risk is going in. You cannot lose more than that spread between those.
Yeah, she got wiped out, unfortunately. She made some bad things, but look, she made it all back. It's a great story. Super Trader Karen, bro.
I'll check her out. Thanks.
Yeah, definitely.
So, Prof, you know, you put those two together. That's a good combo for me, and I think it makes sense for little guys. You can do a small account.
And you're doing it on individual issues, not the indexes.
I do SPX. The cash SPX is the only index. Otherwise, all individual stocks.
All individual stocks. Okay. And okay, so that's great. And you know, Super Trader Mike, you have a on your website, you have like some stocks that you list every day on your bullet board or whatever it is. What do you call it again?
Yeah,
the
my watch list. Yeah,
watch list. And so explain the watch list so people can kind of get a flavor on what you put out there on On the watch list. I
try to do
looked
that,
at it
yeah.
once. There's like volume involved and
Yeah, I
percentage change and things like that.
I try to do it every day by 9 o'clock. I do. Was it
Yeah.
updated today on the 20? Last one was on the 23rd, actually.
Okay.
So I didn't update it this morning, but it goes according to volume
Right.
and momentum.
Right.
Whatever is hot on the gainers list for that day, near my even number, I love it. ENTX, $7. I picked it. OCGN, $7.50, the little mini 50-cent move. GSAT is on there at $1.90 to go through 2. AHT is on there at $4.80 to go through 5. And Tilray is on there at 18 to go through 18.
I got you. So you get a wide variety of different stocks, but they're basically, because of their momentum and volumes, are very compelling.
Yeah, absolutely. OCGN picked on my website now. It's $7.50 is $8.50. It's up $1.19 and 16%. GSAT is up a nickel. AHT is up 60 cents, 13%. And Tilray is up 6%. And if Tilray is up, the other weeds are up.
I was just asking a question here. Sometimes I've noticed that you'll get a huge volume move and a spike up, and then for whatever reason, the price will come back down and the volume dries up.
Oh yeah,
when that occurs, is it a dead deal at that point?
Dude, you got to Google this. After you Google Super Trader Karen,
yeah,
Google this. Jim Cramer manipulates the pre-market. Google that. The one video is going to come up. Jim Cramer is going to come on and say, hey, when I was in the hedge fund game, we did this little trick where, you know, we wanted the stock to go up higher. We throw in 10 million or so, but we really were sellers in it. And then it would fade off all day and we'd be able to unload a lot of stock. A real easy trick to be done in the pre-market. Everyone does it. It's legal. And you just throw 10 million at it and you get this artificial pop and then the thing dies. And he explains how he does it on the show.
Mm-hmm.
That's why.
So what you're saying is when that does happen, that can be a situation where whatever was going on is now dead, or it's dead.
Everything's manipulated. Take everything with a grain of salt.
Yeah.
If thing makes a rise up and it's traded heavy volume to do that, when it continues during the day, 10 minutes later, it better trade 2 times that volume it just traded and continue up higher. Otherwise, you're falling in the trap. It's like you're stepping in the woods. There's a bear trap right in front. You're going to step right in. It's going to clamp your leg in about a second.
Right. All right. As we come to the top of the hour here, John, can you just, again, give some people a little bit better idea of how to contact you, of course, and then when they contact you, if you have any special offers you want to extend, this would be a great time to do that.
Sure. They can try me at john@tradinggods.net, or they can just go sign up for our newsletter. And we do sales, you know, from time to time. I work with, you know, people like you and David, and we want to make this accessible to people. So those are kind of on an ongoing basis, and be happy to do that and look forward to that. And as far as, you know, what we're looking at, big tech, the IBD 50, and then there's a website called YOLOstocks.live. If you're interested in those Reddit YOLO stocks, they have a real-time 24-hour ranking of those. Right now, Wish is #1, GME is #2. I know someone was interested in AMC.
I just put out that Wish.
Right now, they're #5, you know, on the discussion board. So, I mean, those are as speculative as you can get. But it's a real interesting phenomenon, as we talked about, where the guy is starting to push around the big guys.
Sure. Well, ProTrader Mike, again, a little bit of how they can get a hold of you, and of course, how investors can. If you had any special offers or things that you're going out there giving,
dude, nobody's in the trenches more every day with what's going on with the hot Momo stocks. That's than me. Dude, Zach Morris on Twitter with Wish, AHT, BBIG, AMC, GME, and all these flyers. Nothing gets by the mojo, bro. I'm always on Twitter, always in the market, in the trenches. I have my Mojo Day Trading chat room on Discord. I have right now 300 members in there. My goal is to get to 1,000. So I'm going to offer your audience an amazing offer where they can get my chat room. It's $149 a month subscription. My newsletter, that CANSLIM, goes out every Sunday to prepare you for the week with the upcoming winners. That's also $149 a month. And my course is $500. I'm going to give it all to your audience for $149. You do one subscription to the chat room or the newsletter. You get them both. And I'm going to hook you up with my course so you can learn it all and apply it yourself. And the money you'd spend on the course, you put into your portfolio and go for your first pick with the Moj. And that's what I want. MojoDayTrading.com, right on my homepage. You can join as a member. And when I get your member and I contact you, let me know you were from Dave's show. And I'm going to give you the newsletter too, and or the newsletter in the chat room. Don't make a difference. And my course, all on the Moj.
Okay, sounds great. It was a pleasure to have you guys in here. We covered a lot of information and a lot of stuff, so I'm sure people got a lot of value out of it. And again, for optionprofessor.com, we have the weekly market update that's free of charge. And you go to optionprofessor.com and put your email in, and you're in the queue. And this Friday, we'll give you an update on what we see going on right now. Let's send it back to David. Again, thank you, ProTrader Mike, and also John of Trading Gods. You guys have been great. And David, back to you.
Thanks, guys. Peace.
ProTrader, nice to meet you. Prof, always a pleasure. Thanks.
You bet, John. Thanks.
All right, thanks guys. Yeah, lots of good info today. So I'm just going to give a quick reminder. Be sure to subscribe to Timing Research on YouTube and your favorite podcast app to get instant updates on when I post new recordings and events. Also, you can just go to TimingResearch.com to get access to the archive of this show as soon as I can get it posted, or any of the past shows and events there as well. And I just want to thank my lineup again for today. John Nyaradi of TradingGods.net, ProTrader Mike of MojoDayTrading.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.
Cool, David. Always great, man. Have a good one. Thanks, buddy.
Yeah, thanks.
Take care, guys.